All right, all right. Let's see if we can get this silly thing to work. It won't work. I don't know why it doesn't want to work. Huh. That's weird. Sorry, guys. We're having a little struggle here. All right. Are we back? I think we're back. I think we got it. It came up and gave me a big error right in the middle of the thing. Guys, you can't stream today. You've been blocked. And then I wondered if it was because it was set up to be for 8 p.m. tonight. not not in the morning. I screwed up when I set it up. I set it up for 8 p.m. tonight. So welcome this evening to our 8 p.m. class. Glad some of you showed up anyway at 8 a.m. Well, we still got a good little class in here, so I think most of you know that it's 8 a.m., not 8 p.m., even though I made that mistake. So nice to have you here, and I think we're still here. Can I get a sound check? You guys still there? It says you're still there. I just don't know if anybody's still there. It says here we got Bruce. Bruce is coming in. We got Albert's here. We got Chad still hanging out. Um, I hope you guys are still out there listening because I had to reset the whole thing, but it let me come back in and it shows that you guys are here and it shows that we're counting down the minutes. So I guess we're good. All right. We're going to go in today and I want to talk a little bit about yesterday. We did a little bit of day trading in the stock market. And okay, Bruce is giving me the thumbs up. He says he's still here. He can hear me. All right. So we're going to go through and what I want to do is I want to talk about the day trading that we talked about yesterday. And we were doing day trading in the futures market. And then we came over and did a little bit of day trading here in the stock market. And I got a couple of comments on that, a couple of emails that said, why don't we trade more stock shares? They liked the class yesterday where we were doing stock shares. And we don't do stock shares in here very often. Mostly we're just doing options. I skipped stock shares because I personally don't buy a lot of stock shares. So I have stock shares and I do trade stock shares. I just do more options. Options make more money than stocks shares. But stock shares, a lot of people want to just trade shares. They don't want to trade the options. And so they're saying, why don't you trade more shares? We would come to your class more often if you would trade shares. We don't trade shares enough. You just trade options. So I'm like, well, maybe we better do a little bit of that. So I thought we'd try and do that a little bit today. And I thought the first thing we could do is just go down through our Club 100, our 100 Club, and we'll just look and see if we can find any opportunities to put some shares on. I'll just show you how I do it. And it's just a real simple process. We're going to do the same thing that we always do. Let me come in. We'll start right here off with APP. Now, this is my 100% club, meaning that everything in this list went up 100% last year, at least 100% last year. All right. Now, it doesn't mean it closed above 100%. It might have gone up 100% and then come down, which most of them did because we had this big blow off. But that's okay. That gives us an opportunity to buy low, right? We like to buy low, sell high. We're not those guys that want to buy high and sell higher. That's really hard to do. So we're going to come in here and we're going to put in some, you got to count and measure. And if you're not willing to do the counts and measures, then you better not be trading, right? You can do the options trading a little bit better without count and measure because you're going to do a little bit of selling premium and collecting premium along the way. But you still need to count and measure with options too, but not probably don't need to be as fine tuned in there. All right, and there's different ways of trading shares, of course. I mean, I'm writing an article for Pitt News Magazine. Speaking of Pitt News Magazine, how many of you got your Pitt News Magazine yesterday? We sent it out early. It's supposed to be the first Monday of every month, and that's not till next Monday. That's like, what's next Monday? Next Monday is the 5th. That would have been, you had to wait 5 days into the month to get it. So I didn't want to make everybody wait 5 days. I was so excited about this issue, get it out to everybody. Let's pull it up and look at it. Let's talk about it a little bit before we go place all our orders. I'm going to pull up here, see if I can find it. Pit News issue. There it is. There's the new issue. And I can show you the cover because it's been released. Meet Aladdin. Look at that cover. Man, that turned out nice, didn't it? Don't you guys think that turned out nice? Let's make it a little bit smaller so we can get the whole thing on the screen at once. How do I do that? Oh, down here. Go. Boom. How's that? One more? There we go. All right. Look at that beautiful cover. Land Turner down there in the bottom left corner, the BlackRock Algo Aladdin, and my conspiracy theory. How many of you guys got this? The Taxman Cometh. Don't Sell the Golden Goose by Claire. And then we come down here and have our welcome screen. This is the content screen. Look at that. Beautiful. Beautiful. There's Aladdin right there. I am. And here we come down here. This is if you guys didn't listen to this yet, this is really good. You have to listen to this one while you're sitting very quiet and listen. And look at that picture while you listen to it, because that's a good poem. You know what? Something's wrong with mine. I have to reset here. I think that did it. Let's see. There we go. All right, there's the poems. I was worried there for a second, didn't have the audio in it. Now we got to go back minus. Randy says, you have the best artwork. We do have the best artwork. We work on that for a while. Well, of course, we're doing it with AI. AI is helping us with it, but we have to sit there and ask AI exactly what we want. And AI works on it for us and helps us. And we do like 10 million different versions, and we lay them all out. We pick them, and we have a lot of fun with it. It's really a good, fun thing. So AI has really been really helpful. It's been a lot of fun. Look at this. This is funnier than hell. We had fun with this one here. Of course, we got and then this is the article. This is my article. BlackRock algorithm, my conspiracy theory about the BlackRock algorithm. Now, you guys who come to this class on a regular basis, you know my theory on this. You know that I believe that the markets are manipulated and controlled. Well, this is an article on how they are manipulated and controlled. And we go into detail on all my thoughts about it. So it's a really good article. Talk about the upside down pyramid in there. We talk about that a lot here. Don't build your upside down pyramids. And you know what really turned out nice? Of course, we got lots of articles in here. There's Claire's article on my portfolio was down. So here's what I did. She had to pay taxes. And so she called and says, what am I going to do with my taxes? And then IV rank. If you're options trader, that's from Doc Brown. And then I put another article in there because I was so verbose last month. I had to write 2 articles. Of course, this is about the yield max stuff, the steering wheel model. So, operating your stock portfolio as a business as opposed to a real estate flipper or as a real estate rental company. So that's a little bit of a different. That's a fun one. Talk about that one. Of course, we got the stock market playbook of strategies. Don't forget to go get that. But this turned out really nice. How many of you have listened to the podcast? Because the podcast was done about my article, and so they really go into detail, highlighting all the things within the article, and they really did a good job this time. So I really like the podcast. And then we got, of course, we got the seasonal stuff in here too. So we got seasonal trends, and you can't see the joke. The joke is too funny. I fell off my chair when we got done with that joke. That was so funny. All right, you can see it was about Trump, but you can't see it until you get the magazine. All right, so let's come over here. And what were we doing before we got so distracted by such a fantastic magazine? Everybody, you should have the magazine. Go over to pitnews.com and pick up your subscription service. All right, so here we go. We're going to come in and take a look at some of the stocks. And this is the S&P 500. This is FinViz. This is my favorite little, it's a little mind map, this little thing here. Look at Apple. You guys all know I'm not a real fan of Apple. I got an Apple iPhone, and I've been looking at the Google phone. I think I'm going to switch. I think next time I buy a phone, I'm not buying an Apple phone. They just aren't doing anything with AI. That's why they're down. They just suffer. They're not in the AI race. They just can't compete. How can you compete in a world of AI without AI? They supposedly came out with their new little iPhones, and they forced everybody to buy the iPhone so they could get the new features of their AI stuff. So everybody went and bought their new iPhones, and then the AI features don't work. It's still got old Siri in there that doesn't do anything. So Bruce. I love the joke. Wasn't that funny? Ah, that was so hilarious on the joke. That was really funny. You know, I really love Trump. I think he's a great president. I voted for him and I support him in everything he's doing. I don't think he's doing anything out of the I think he's doing good stuff. I think it's going to be hard for the country to kind of reset because we've been living off the credit card for so long. And when you stop living off the credit card, that's hard. You know what? It's hard. And old Elon's out there trying to take care of us and cut the waste. There was a did you watch him? He actually let what's that kid from Fox News? Um, Jesse Waters sit in on a Doge um, meeting, and you got to meet all the guys that are in Doge, all the leaders. They said there's over 100 people now, so there's kids working, but those are all the department heads of Doge. Did you see that? It was amazing. I was so glad he did that because it kind of opened up and says, "Hey, these are the guys that are saving us." And then he went around the table and let everybody talk about, what they were doing and what they were finding in the different um, government agencies. We all know the government is so corrupt. We've been so frustrated with it for years, right? I mean, the government's just been so corrupt. We know that it's just blowing money out their ass. So to see Doge go in there and see those guys talk about it and how it's all been done, it's just amazing. So that was really good, fun thing. And I'm really on board with that. I would love Kennedy. This is my Kennedy hat. I'm a real big Kennedy fan. I think he's amazing. He's one of the most inspirational. If you guys haven't sat down and just sat at that boy's feet and listened to him speak for, I mean, you hear little clips of him and they always clip him for little sections and he's hard to listen to because he's got that voice problem. But when you get over that and you just sit there and listen to him because sometimes he speaks for, you get him for 45 minutes in an interview or something and he's just amazing. So inspiring. I really love that guy. He is so amazing. And so anyway, enough politics. Let's get back to why we don't like Apple again. That's more fun to talk about why we don't like Apple. Apple tried to partnership with OpenAI, which is funny because that's Microsoft's AI company, right? Microsoft owns 50% of OpenAI. I guess they don't really technically own 50%. They're 50%. They've given them 50% of their value. So it's really a Microsoft company. And then Apple's like, oh, well, we want AI too, and we're too dumb to be able to make our own. So we'll go out and we'll just get OpenAI too. So they tried to put OpenAI into their Apple iPhone, and they've come out with the new iPhones, made everybody go buy new ones so that you could have this AI feature in there, and then it doesn't do anything. Unfortunately for Apple, Google is kicking ass. Excuse the language, but Google is kicking ass with the putting their AI system into their phones. Their phones are amazing. How many of you have phones from Google phones and have the AI stuff in there? You might not realize it because you've not got an Apple phone. You're like, oh, this is just what AI is in phones. No, Apple phones don't have good AI. They suck. So they're not doing well. Microsoft's doing well. Look, everybody's up except for Apple. Apple is getting knocked off of their pedestal here. So everybody's in a big run up, right? Let's go look at Apple. Apple should not be in this 100 Cub, but we're going to go look at them. Look at this. Fluffed out today. Hard. They started to recover, but they're on their full 3-drive pattern down. Drive 1, counter trend. Drive 2, counter trend. Drive 3. Most companies didn't make 3 drives down. They made the 2 drives down, right? So Apple made full 3 drives down. The S&P only made 2 drives down, right? The S&P only made drive 1, counter trend, drive 2. Look at the S&P. It's already all the way back up. If we take our 50% ruler, we go to our delta cone of probability. It's already at 61.8. Full retracement right there. Isn't that amazing? Amazing. Pretty cool, right? Already. And it's just following our mathematical models like a train on rails. All right. So Let's go ahead and delete all those tools. Let's get rid of SPY because we're not going to play a lot of time with that one. We spent a lot of time on that one. Let's see, how do I delete all SPY? There we go. Delete all SPY charts. All right, so let's come down here. We got to get rid of Apple too because we're not going to trade Apple right now. It's falling back down. If Apple's going to go up. I mean, don't get me wrong. This thing's not going to keep tumbling down, although it should because they got nothing going for them. So, where's it going to go? It's going to probably make a little ABC pattern like this. And this is just going to give you an opportunity to get into Apple right down in here. So watch for that. Kind of start adding a little bit in, doing a little dollar cost averaging down as it comes down. I like to drive the Fibonacci ruler if you're going to buy shares. And you're going to buy your first tranche of shares when it hits 38.2. You can buy another tranche of shares when it hits 50. You can buy another tranche of shares at 61.8. And if it keeps going down, you can buy another tranche of shares. We'll come down here, fib lines at 78.6. All right, so you can do that. And I'm writing an article in Pit News Magazine about this. So about how to sell out when it goes up and buy in when it comes down. Sell out when it goes up, buy in when it comes. We're going to do what the big boys do. All right, we're going to do the accumulation distribution model. And so when I trade stocks, that's how I do it. Do the accumulation distribution model. All right. Why in the heck am I losing my voice? Hold on a second. I got my blueberry water today. You guys have your fruit water? You got to have fruit water. I was told that I don't drink enough water by my doctor. And I'm sure if I'm not drinking enough water, you're not drinking enough water either. You're not drinking enough. That's you. I'm pointing at you. You're not drinking enough water either. 2 liters. And I said, I'm supposed to drink 2 liters a day. And I was like, what? A liter is one of those big soda pop things. And he says, not the soda pop, just the size water. 2 of those a day. It's like, I can't drink 2 of those a day. I can barely drink half of one of those a day. He said, no, you got to try and drink 2 of those a day. And I'm like, are you kidding me? Water just doesn't taste good to me. I can't drink water. So I put fruit in it. I got berries in it. I got blueberries today. So it makes my fruit taste a little more water, taste a little bit better. I'm trying to get a little bit more water. Still haven't hit 2 liters in one day. Can you imagine 2 liters in one day? Holy cow. Be up 10 times in the middle of the night trying to pee it all out. Anyway, this is where we're at. This is not a medical class. This is a trading class. All right. So this is how you get in. This is how you get out. So let's come in. We don't want to buy any Apple right now. It's not down far enough. We need to wait for it to get to 38.2. We can put our first tranche in. We'll put in, let's say if we're going to put $100,000 into Apple, we would put 20% in at 38, 20% at 50, 20% at 60. So that'd be 20, 40, 60%. If it hits 78.6, we could put in another 20%. So you're going to go 20, 20, 20, 20 all the way down. And then if it starts to go back up and you're confident that you can put a stop in there and get it on the way back up, you can add a couple more. So you can go 20, 40, 60, 80. And then when it starts to rally and gets up here and starts to look like it's on its way up, you can add your other 20 in and you got your full 100,000 in there. That's why that's why we got 38, 50, 61, 78 on the way down. This is where you start putting money in. Your dollar cost average down, get your position in. That's your accumulation zone. If you want to wait until 50 to try and draw your accumulation down a little bit further, you can do that and just use 50, 60, and 78. Problem with that is it doesn't hit 78.6 very often. So you might want to put one in at 28 or just wait for it to hit 50 and put 40% in at 50. You could do that and then put another 20 in here, another 20 in here. However you want to do it, but just, add as it comes down. That's, dollar cost averaging down. Usually that's building your pyramid, upside right, not upside down. Mostly what we like to do is we like to buy on the way up, right? We make a little bit of money, we take the profits and we buy more. We make a little bit of money, we take the profits, we buy more, buy more, buy more. We keep buying all the way up and that puts the upside down pyramid and that's where we lose all our money. Don't do that. Do it this way. All right. All right. So we're going to come in here. All right. But we're also on the way up. So we need to get some money in here. We don't have any money in. So this looks like a nice little marker. So we're going to come in here and count and measure this. We got 2 drives down, drive 1, counter trend, drive 2. And then this thing just broke about across there. So that's actually a buy signal. Now we're not doing it. And just as I told you, we need to buy low, sell high. But this is, this is a recovery. So we're going to come in here. We're going to put some. We want to get into this market. We didn't get in, so we got to put some in. But don't sit there and buy all the way up that trend. You get in trouble. Remember? Okay. So we're going to come in here, and I'm going to come down to a 15-minute chart. This is how I do it. I'm just showing you how I do it. I don't know how you can do it. You can do it however you want. This is just how I do it. Okay, so now if I look back at the daily chart, I can see that this is just one day right here. And this all the way back down to this one here. That's 3 days back. Go to the 15, that's clear down here. So if I'm looking at the daily chart, I'm saying, well, it's broke the previous high, and I want to put my stop 1 bar back, or you can put it, the action bar. I call that the last bar is the one that's moving. I call that the action bar. So you can put it on behind the action bar, which would be in this case which would be right here, right? The low of this day, we went up, we'd have this, we have all these different levels, right? So that one pretty much goes back. The other level would be right here. You could put your stop back there. You could put your stop clear back here if you wanted. But in my opinion, if the market breaks 1 bar back, which is this one here, it's probably going to go down and break this previous low. I don't generally see it come down, break here, and then turn around and go back up. Now it does that because it likes to come down and stop you out. But that's where everybody put their orders right here, their stop orders right here. It's like, Lan, why would I put a stop order at all? If I want to get into this market, wouldn't I just put a limit order and buy some more? Yes, you could do that too. But this is for people who just want to get in, and if it goes against them, they just want to get back out. All right. And I do this a lot. This is how I get into positions. And you can do both. You can break it up. Let's just do one first. Let's come in here and say, okay, we're going to come into the trading tab. Oh, we got to grab our dollar calculator. So we're going to grab our dollar calculator. We're going to go from where the market's currently trading to where we'd get out if we felt like we were wrong. Well, we might want to just get out if it breaks the previous low. So if that's 100 shares, that's a $2,249 risk. We put 100 shares in right now. If it came back down to here, we'd lose $2,249. Well, I don't really want to do that. So I'm going to come in to my preferences of my dollar calculator, and I'm going to draw this down to a value that I don't mind. Now, these are $285 shares. So let's say we want to risk $100. There's $112. So that's 5 shares. So if my 5 shares come down to this level and I get out, I would lose $112. But I don't want to just have it keep coming down. All right. I don't want to keep losing money. So I come in here and I put my stop in here. So I go like this. And what I do is I say, well, I got 5. So we're going to put in 5 like that. So we're going to buy 5, right? And we bought our 5, and we're going to put our 5 stop right here. And that's it. That's all there is to it. You calculate how much you want to risk. It tells you how many shares that would be. And you put your stop in. All right. Now, we're not going to do double up on this one and go down to the next level because it's too big. So we'll go to the next one. And let's see what we got going. Oh, we didn't count that one. I wanted to show you. We got to count this thing. Let's get rid of all these. So we got to, oh, well, now there's too many lines in this screen. View, hide all on-screen stocks. There we go. Yes. Okay, so we're going to count this real quick. We traded first and we count second. So this is an X1S A1, right? Now, X1S A1 is on your way down. It's the first exit to the short side. So if you're short the market, if you got in right here, right? If you got in right there, then you come down when the market comes up, that's your first exit, X1. But it's also, if the market turns and starts to go back up and that's the new bottom, that would become your new A1. But that's real rare. The X1S A1 is really rare to be a new A1 bottom. But the probabilities are there, and we oftentimes say that there's probably, given the fact we get 3 drives, it's roughly a 25% chance. So it's a low chance. Not that it can't. Certainly can. It can go up from there, but usually doesn't. So we don't want to buy in right there. We don't ever want to be buyers on X1S A1. Don't ever buy on an X1S A1. All right. If it goes up and makes an X2S, or it wouldn't be X2 there. You just get rid of the X2 at that point because it's the exit point to the downside. If it comes in with an A2, then you could go ahead and consider taking the A2. All right. So like right here, for example, this is a B1 or an X1S. I'm sorry. We're back to X1s again. This is X2S A1. So it's on the way down, it's the second exit down. So this is drive 1, drive 2. Now, when you're in the stock market and markets are in a bull market, you anticipate the X2SA1. That's your good one. That's like, we call that, like a 60% chance that that's going to be the bottom. All right, that's good chance. That's a good one. We like that one because remember, Elliott waves look like this. Elliott waves go 3 drives up, all right, and then they make 2 drives down. And that second drive down on your Elliott wave, so this is your drive 1, this is drive 2, drive 3, counter trend, drive 3, drive 2 coming down. So that becomes right there, this is your X2S A1 right there. So at the bottom of that Elliott wave, that last drive down on the Elliott wave is your X2SA1. That's a really good place because that's generally where we see that market turn around and start to go back up. And you'll see it comes down to the delta cone of probability over the overall longer term trend. So that's where it comes right back down into that 5061.8. So when it comes down there, that's where we expect the market to turn around and start making new higher highs and making the next 3 drive pattern up. All right. That's what we expect. That's like train on rails stuff. Now, it doesn't mean it can't come down and make a 3rd drive. It certainly can. And when that happens, this becomes X3SA1, right? X3SA1. Now, the problem with X3SA1 is because now the market has gone into a bear market. You now have 3 drives down. And if you get 3 drives down, usually what happens, right? That's why we were so scared on the S&P 500 that we're going to get a 3rd drive down, because that means that you're going to then get your 3 drives down. You're going to get your ABC back up, right? And then you're going to get your next 3 drives down again. That's what puts you into a bear market. And so X3SA1 is scary because you can take it. You can say, well, it's a high probability it's going to go up, but it's probably only going to go up ABC and then start to come back down again. Now, in the stock market, we don't generally see that because the stock market, traditionally speaking, generally has bullish markets, right? We've been lucky. Markets have been bullish. Now, in the futures market, we see a lot more of this full pattern ABCs down. We'll see multiple 3 drive patterns down. We'll see multiple 3 drive patterns up because the futures market is not a constant bull market. All right. It has bear markets, and it goes down because it's based on supply and demand more than stocks are. Stocks are more of a carnival game. The futures market is more of a business. All right. So you have it's more subject to supply and demand, whereas the stock market, they say it's supply and demand, but it's not. It's a carnival game. You're gonna come in here and throw your darts at a balloon, all right? Or you're gonna throw basketballs into a tiny hoop. That's what we're doing here in the stock market. You just got to admit it. All right. Sorry if you just offended somebody, but it's true. It's true. The futures market is not nearly as manipulated. Not that it's not. It certainly is, but not nearly as much as the stock market. All right. So we're going to come in here. So this is the X2SA1. You got a pretty good chance that's the bottom. All right. So X2SA1, that makes this little bump right here. This is an A2. All right. So that's an A2 right there. And we love A2s, especially on X2SA1. That's like one of the best places in the world to get into the market. Okay. So we come in here and we go unhide, and we got in at the best place. Okay. Now we're holding our stop a little tight in there. We have to admit, right? We should actually probably be 1 price bar back, which is right here. And we come back and we look on our 15-minute chart. See, it's back here at this line level right here. That's where we should really be on this one. That's just a little bit too tight. That's the action bar. And sometimes markets will come down and touch the action bar. But you have to say, if it's going to break the action bar, it's probably not in an uptrend. It's probably not a trade I want to be in anyway if you're trading. Now, this is more of a trade, not quite so much as an investment. All right, so we're trading this one. All right, so let's go to Broadcom. Now, Broadcom, get a count and measure. Look at this thing. Let's place that where I want it. Let's see. So now we're going to come down here. This is kind of a topping formation. Now, Okay, drive 1, it's just an ugly little topping formation. Drive 2, drive 3. So we got 3 drives. You see the blue lights? I'm just counting the blue lights. What's the blue lights, Land? It's called the bulls and bears. All right, so it's the bulls and bears in your trading software and your track and trade software. What's track and trade? Land, I don't know what track and trade is. I never heard of track and trade. This is my first day. Okay.
Well. Okay, this is the software I use. It's called Track and Trade. They've got 2 versions, one for stocks, one for futures. This is the website, track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, how's that? How's that for a cool ad? All right, you didn't know you just got an advertisement, did you? That was so clean and slick, you didn't even realize it was an ad. All right, let's come in here, and we're on the way back up now. So we got, let's draw this down a little bit so we got a bigger screen. We want to see a little bit bigger chart. There we go. All right, so now we got 3 drives down, and we got, look at this beautiful little ABC pattern. So let's count them. We got to count them. I'm going to come in here. This is an X3S, A1. It's always A1 because it's the first rebound to the upside. So it's 3 drives. So this is X1SA1, X2SA1, X3SA1. Now this X2SA1 failed on us. It didn't go up. We got the X3SA1. So we went all the way to the bottom. Now we're getting a little ABC pattern. Now we're in the stock market. So we have to take that with a grain of salt. Because technically speaking, this should be 3 drives down, ABC up like this, then we should get another 3 drives down. Is it going to do that? I doubt it. I doubt it because we're in the stock market and this thing made 100% last year. I think it's going to not have the 3 drives down. I don't think we're going to get 2 Elliott waves in a row. So you should get 3, right? 3 Elliott waves down, 3 Elliott waves up because that's just one Darvas box. We usually get 3 Darvas boxes, right? So there's 1 Darvas box. Technically speaking, if we followed Darvas's law of expectations, we would get another Darvas box down here, and then we'd get a 3rd Darvas box down here, right? And in the inside each Darvas box is a 3 drive pattern, an Elliott wave. X1, 2, 3, 4, 5, X1, 2, 3, 4, 5, X1, 2, 3, 4, 5. Right? And then you'd get the reversal and back up. So you'd have 3 drives down, you'd have 3 drives up over a long period of time. Now, we don't generally see that in the stock market. See it more in the futures market, but not so much in the stock market. Not that you can't, certainly can, but that's not what we're going to plan on. All right. We're going to plan on that this is just the bottom. We're going to get, we're going to look at this thing and say, I think this thing's going to go up. We're not in a bear market. The S&P didn't break that second drive, didn't go into a bear market. It just did its standard train on rails thing. So now this is an X3SA1, which makes this right here X, not X. We're out of X's. We're now on A2. This is an A2. And why is it an A2? Well, it's an A2 because it's still inside the first set of blue dots. All right. So it's the second opportunity to get into your A drive. So you draw it there. There's your little thing. And oftentimes those will be big enough. You can have like a little spider web in there. All right. I call them spider webs. So you got little breaks in there that you can go the first break, the second break, or the horizontal break. A lot of traders will buy on a break above a previous high. I don't know why, because they think that once it breaks the previous high, the market's going to go up. So a lot of traders will buy right there. It's a tough place to buy because oftentimes markets come up, test that, come back down, stop everybody out only to go. So you be careful with that one. I like to try and buy low down in here just as it breaks up here. It's a little bit more, it's a little bit more risky because you don't know. It could just make one break and then come down and do it again and stop you out. But that's kind of the way I like to do it. You guys can do what you want. I'm just telling you what I do. All right. So there's your A1, A2 right there. And then if you want to wait for it to break above the previous high, there would be your next break. You could go across the first candle, so kind of a halfway through. All right. And sometimes we'll turn on our ATR, and you'll get an ATR dot inside of there. All right. So right there, you got that little ATR dot. See that yellow arrow telling you the ATR dot? So it broke kind of the same spot. So that would be your inside one. That's a little tighter on the ATR. All right, so now we're going in here. Now, look, we got another little bump right here. Almost, I don't know if I want to call it this, but I'm going to anyway. It's the A3. A3. Doesn't mean we can't go to A4, A5, A6. We can, but usually we go A1, A2, A3. So we got A1, A2, A3. That kind of almost, it broke the previous low. So the name of the game is higher highs and higher lows, right? Higher highs and higher lows, lower highs and lower lows. That's the definition of an uptrend and a downtrend. Definition of an uptrend is higher highs and higher lows. Definition of downtrend, lower highs and lower lows. If it stops making higher highs and higher lows on the individual price basis, look, one bar, higher highs and higher lows, higher lows. Now you can turn off Heikin-Ashi and you can look at it and say, oh, wow, oh, yeah, that's a little bit cleaner. But I like Heikin-Ashi, so I kind of use those. It's kind of like the cheat codes, in my opinion. So you come in there and you see the reason we call that an A3 is because it didn't break the previous high, really close, almost the exact price. But it did break the lows. So it broke the lows. So we're going to call that an A3. It's kind of a really tight one, but it's still an A3. So that's a buy point right there, right? You buy in on you can buy in on the A1s, you can buy in on the A2s, you can buy in on the A3s. And I don't think I want to buy into a market that's already at an A3. Why? Well, the blue lights are a long ways back, still a long ways back. You're going to draw your spider web the same way here. You're going to go natural trend line on the longer term trend. The mathematical model is going to come in, and you're going to draw your trend line to that one. And then you got the horizontal across here. All right. So on the longer term trend, you do your spider web that way too. All right. We just call them trend lines, right? Or progressive trend lines is what I call them. All right, progressive trend lines. So we can come in, I'll show you a progressive trend line. Watch this, it's kind of cool. We take this, we go to the preferences, we tell it to snap. All right, so we turn on snap, and then this little thing right here will snap to the highs and lows. Watch this. I bring it over here and it'll snap right to it. Book. And then we take this one, we snap it to this one. Book. Just like that. See how it snapped right to it? So it's perfect. And then you come over here and say extend. Boom. And then there's your trend line. Now, remember, that's going off of our geometry. All right. So this is our geometry way of trading. So geometry is a triangle. So just like that. Just like that. So we got one little geometrical pattern, right? And then the next one, come on, that's probably still, look, it's on snap. Don't snap. Turn off snap. Okay. And then I better save as my default. Save as my default. No snaps on this one. Okay, and then the next one is going to be the next little triangle. So the next little triangle is going to come up, and where's it going to go to? Well, we don't know, but we can make some projections. We can, first of all, draw a trend line, but we don't have a trend line across it. You can go from here to here and say that it's go like that, but that's kind of, I don't know if I trust that one. But you got your trend lines in there, right? The next one, actually, our trend lines are going to go from this peak here to the next peak here. Right now, the peak's right there. So we don't know. They come up here. We're going to do a Fibonacci projection and find out where we think it's going to go. So we take this low point here, make a little ABC, put that in there, and boom, all the way up that trend. There's our 90. Remember, 90, 100. And the reason we put 90 in there is because the market doesn't always go to 100, because sometimes ding-dongs don't use the bottoming tails. And so we end up with 100 like this. So 130.9 is up there too. We got that looming, and that's a good place for us to go because that's a golden ratio. So our little triangle up here might end up, we got to just, wherever it goes, not that one, this one here, wherever a little peak goes up in here is where we'll peak that out. We'll attach it, it'll go right in there, and then we'll just kind of anticipate it's going to come back to that trend line. Now, sometimes it comes back down to this trend line, and that's okay too. All right. Comes back down to this trend line. But we don't know where this trend line is until these blue lights come in. Right now, this trend line is actually clear down here, because you always put this trend line, which is the mathematical trend line, right on the blue light, all right? Right on the very last blue light. And as this market goes up, this blue light will keep accelerating up into it. See how it accelerates? Goes long, and then suddenly it gets bigger gaps between it. It comes in really fast. So this will do the same thing. It'll go up, and as soon as this thing starts to stall out, this blue light will start to boom, 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 accelerate up into it really fast. So you keep this this mathematical trend line attached to that last blue light like that. So you have it cross through it like that. And eventually that'll come up, and it'll move up, and it'll cross over. All right. So that'll be your crossover. And you can just follow. You don't really need to do a line, because that's what the blue line is. All right. That's what the blue dot is. That's where that blue dot's going to go. But anyway, that's how that works. So this is where we're at right now. We're up at and we're going to put this down. I like to use the tails. So this tail here, either one. All right. Any of those spots right there kind of The problem is people knock off those tails, and they're not supposed to, but they do because they're YouTube experts. They're not trade experts. They're really good at YouTube, but they knock off those tails. Don't knock off the tails. Some guys do, and that's why we have to have 90% in there. So there you go. There's our projection. We expect to come up in this region here. We'd like to see it go up to 130.9. That's the golden ratio. It's more predictable if it does, because that kind of be where it stopped. Then we'd expect to come back down. So we're into an A3. I don't really want to buy at the top of an A3 because there's not much room for it to go up before it flushes back down again. Where's it going to flush to? Well, nobody knows. But we can draw our Fibonacci ruler in there. Again, you can knock off the tail if you want. And then you're going to find the top up in there. You can put it in there. And then you're going to expect it to come back into the one standard deviation, which is right down in here. So we'll look for this market to come up here and then turn around and come back down in here. And then you can be a buyer. You can start buying down in here. So you can buy 20%, then you can buy 40%, buy 60%, and you can anticipate that market going to go turn it back up again. All right, see how it all works? It's all one big plan. Works beautifully. Okay, there you go. So don't buy right there. You're already too high. You missed it. Exxon, same thing. This is the exact same thing. All right, same exact thing. And don't get too big, because then you lose your focus when you get too big. Now this is a big market. Axon, look at that, $635 a share. But we got that same thing going on in here. We got drive down, counter trend, drive 2, X2SA1, and then this thing broke, went up. We got our little break in there. That's our A2, right? That almost is an A3 right there. That's another, and those little A2s, A3s, they're little pennant formations. All right, that's where you get your pennant formations. So you get a rally, a little pennant formation, a rally, a little pennant formation. So this is actually, we're coming into this one here. This one here is also an A3. It's an A3 right there. And usually A3 is the top. We'll sometimes get an A4 or A5, depends on how good the market is. But usually it stops at A3. So you don't want to buy anything above A3. That's the point I'm trying to make. A3, you're done. Don't try and get down. If you have a market already, if you're already in here and you're already in here, and you're making some, and you want to, and you're going to try and buy on the way up, right? You got to get out of this thing. If you're going to trade like this, you can't hang on to it unless you, because you're building an upside down pyramid. This is an upside down pyramid strategy. So be careful. You got to be ready to take your profits off up here. So that's the idea of this type of trading. And we're not investing for the long haul on this one. If you're going to do that, you got to just buy all the way down the trend and dollar cost average down and get your big base, accumulation like the big boys. This is trading, not investing. Remember, when those of you who've been to my university class, we go through that in the very first class. What kind of trader are you? Are you a trader? You an investor? You a scalper? Day trader? What are you? Because each one has different rules on how you trade. Now, right now, this is not investing. This is trading. So trading, you can build an upside down pyramid because you know that you're going to get out at the top. And that's the name of the game. Where am I going to get out? Take my profits. As soon as this thing turns around at that high peak point, you want out, because that's where you're going to take your profits. You built this big upside down pyramid. If you let it come down, man, you're going to get wiped out fast. So that's why we don't put in at A3, because if you put in at A3, it's really high already. You're buying high, and the chances of it staying high are really low. But you can add on at A3. Just add on small. You add on big at A1. Add on. You can sometimes what I generally do is I get in small on A1 on the X1SA1, X2SA1, and then when I get the A2, that's where I load up for bear. All right, A2, I add a lot on right there. And then if it's an A3 and it feels strong and the pattern looks good, I'll put a few on A3, but not very many, because I don't want to really bring my average price up very far. Only if I think that market's really going to bust up higher. So it depends on what the ABCs look like. All right, ABC. And that thing's up there at 90%. And remember, a lot of guys cut that tail off. So we're up breaking 100% already. 130.9 is the magic golden ratio. So we're at 90%. So there we are. We're up there. I don't really want to be buying deep into this right now, because the chances are it's only got a few more ups possible. And not that it can't go to 160 and 200. It can. It's just really rare. All right, you're paying the odds. We're not big enough to trade all the way up to 161, 200 and anticipate that. It's not a good thing for us. 130.9 is kind of scary. All right, this 100% is usually kind of right up in here is where we generally see this market turn around for us. All right, so A3, and then we expect it to come back down. And it's probably not going to come straight down, probably go a little bit like that. And then, again, it depends on how strong the market is. The market's on a big recovery right now. But if you put this up here, let's say it goes up to 130.9, you would anticipate it coming back down into the delta cone of probability. And depending on how strong the market is, would depend on how, if it just comes down to 38.2 and then takes off and goes again, or how deep it goes into 50, or how deep it goes into 61. And that's where you can start, doing your dollar cost averaging in. You can put your Fibby line in there, 78.6. And if you have to, you could put in more there. But that's where you can start, buying on your way down and trading the accumulation stage. This, you got to get out. You got to get out up here. Okay. Because if you start getting in here, adding on, you're up, your pyramid's going up, your dollar cost averaging up. So as soon as it gets up there and gives you the first candle, gets up into that high, and you get that first candle to break, it's no longer making higher highs, cut it, take it off, take your profits, run away, because that thing's going to come flushing all the way back down, probably into at least the Fibonacci sweet spot. All right, don't say I didn't warn you. Okay, here we come. Drive 1, counter trend. Drive 2, counter trend. This gave us a full drive 3 on Coinbase. And then this is a good place to be buying Coinbase down in here. This is X3SA1 right there. X3SA1. If you wanted to hold on to this one for a long time, you could do your accumulation down in here. This would be a good place to pick up some right here. X3SA1. That's a real high probability. That's the one we put in there and we say that's got a 75% chance. That's the bottom. It's probably higher than that, but I hate to say higher. I hate to put big numbers on there. And then here we are. This is our little break right in here. This is our little pennant formation, right? So that ends up being an X. That's just an A2. Man, load up with bear right there. That's a nice little A2. Now, it doesn't mean it can't break. It can always break at any of these and come back down. Okay, could break at any of these. So let's go put some shares on this one. So we're going to come into the 15-minute chart, and this is $200 per share. And it's come way back down from off its top. Where was it at the peak? It was 350 shares. So we might want to ride this one all the way to the top. So we come in here and we're going to go. How much do I want to risk? Well, I want to put some money in this one because I believe in it. So if we come in with our dollar calculator and we say to here, we're going to do 2 calculations from here to here. So I'm going to come in and on charts. Well, no, we got to go to preferences. Okay, on this one, we're going to go down. We're going to risk, let's say we're going to risk $200 on that one. Okay. Well, let's just make it even 20 right there. And on this one, so that means on this one, we'll probably just go with 10 shares. Well, no, we can go with more shares on that one. So we can go, if we're going to risk $100 on that one, well, how much do we risk on the first one? 200. So if we go up to 200 on that one, we'd risk $200 on this thing. $400 risk. That'd be 28 shares. So we take the first ones off at a $200 risk and we leave them the next 200. So that'd be 48 shares. Let's go see how much 48 shares is. 48 shares is $9,000. Okay, so we're going to put in, we're going to buy 48 shares and we're going to put 28 of them, 25, 26, 28, stop right here. If it drops below there, we're worried it's going to keep going down, right? And then I don't want to, okay, and then this one, we're going to take another 20 shares and we're going to put down here at the very bottom. So if we break the low, we got to get out. It's not a trade we want to be in anyway. But land, I don't ever want to get out. I only want to get in. I'm never going to stop out. This is kind of that's a high little retracement. I don't know if I want to do that. That A2 looks, that's getting in. That's pretty. I don't know if I want to do that. I think it's going to break. But this could just be, it looks a little high for me. I don't know if I want to put that much money in right there. Because this look, this thing looks like this to me. Now that I look at it a little longer. It looks like, where's my stupid Elliott wave tool? There it is. It looks like here, X, 1, 2, 3, 4, 5, A, B, C. And that would bring the Fibonacci ruler back to here. If we went up to there, back into here. I don't know if I want to buy right there. That seems like, to me, on the longer term basis, it's an X3SA1. I don't think that's an X3SA1. I got it in the wrong spot, don't I? Now I'm starting to second guess my counting and measuring here. Okay, delete all the drawing tools. Let's start this over. I don't like what I've done here. Okay, let's kill that for a second. Kill this, kill this. I don't like this. Because this, I think I counted it wrong. Get out of there. All right, so we're going to come in and recount this. This is X3S. X3S. A1. The X3SA1 is right here. It's just got ugly because of that Donald Trump. But everybody buy the market. This is your X3SA1 down here. All right, that's your natural trend line right there. That's your mathematical trend line. And then because of that, it got screwed up. So we're going to say here, come across there. I think this right here, that makes this an A2 right here. Look at that, guys. That's A2 right there. This is X1, X3SA1. That's X2. This right here is A3. And I don't want to be buying a big chunk of money into an A3. Okay, close position. That was a mistake. Now I don't want to be going in heavy like that on A3. So we're going to draw our trend lines across there. And then we're going to get our mathematical trend line. And of course, horizontal is clear down here. So we're going to wait for this thing to come back. All right, we're going to wait for it. It'll probably go up a little bit, but then we're going to wait for it to come back to the Fibonacci zone. We don't know where that top's going to be, but I don't think it's right there. I think we'll get another A3 generally bounces a little bit more, and then it'll come back down into this region here, and we can start to buy down in here. I don't think we've missed our opportunity. Yeah, that's an A3. That started to look crazy on me. I'm like, I don't know, that's too high. Look at the indicators. Look at that. Of course, our MACD is just barely crossing the histogram 0 line. But I think that's what we're going to see. I think we're going to see a little bit of a pullback in here, a pop up, and then give us a little opportunity to get in lower down here. So we'll wait on that one. Sorry, I miscounted that. That Donald Trump bar kind of screwed things up, made me feel like this was the A1. It's not. It's down here. Don't make those mistakes. Don't make those mistakes. Don't make those mistakes. Remember, the mathematical trend line comes in late from the bottom. So your count has to be this side of the dots. The low, this side of the dots. All right. So don't count this or up here. Don't count that as this dot here. It has to be this side of those dots. So what's this one? Carvana. We talked about Carvana. So we got to, if we're going to do the counting, this side of the dots, and it's the low, see that? So it broke the low here. It's lower than this one. So that becomes X2S A1. So down in there, there's your new A1. First candle break a new high. Behind the bars, behind the blue dots. So right here, this is your next little, I don't want to call that what it is. Look at this. It rallied way up and then it had this little fluff in there. Is that our Donald Trump bar? I think it is. We're not going to count that one. Fudge it, land. Okay. So this one here is going to be our new right here. That's our A2. So that's A2. That's where we should have loaded up for bear. We could have got in down here, but we don't know if it's going to just come up and fluff again. But A2, A1, X2S A1, that's good. We like those, right? We always say those are about 60% chance that's the bottom. That's one I always call, that's a 17 at the blackjack table. All right, so look right here. Look what we got. We got, broke the bottom. That almost, this not a good one though. I hate it when it makes little ones like that. They're kind of questionable. It's like, is that really A3? Give us that little bar right there. Is that, turn this off and take a look. Yeah, it's got to be A3. All right, so we're going to come in here. This is A3. So we're not buying into this one either. That's A3. It's too high. We got to wait for the pullback. All right, put your trend lines in there. Up off the bottom of there. Where's it respecting? Right in there. Okay. All right. So when that breaks, okay, so we got that one, and then we're going to have the mathematical one, trend line, which will cross right here, but it'll be up here somewhere. It'll come up and intercept up in there somewhere. We'll put it right there for now. Of course, then you got this one here. And we don't need the bottom one. We don't need that one. This is why this is your speed fan. All right. So this is how you use your speed fan. We got a tool that does it for you. It's really cool right here. See that? Click on that. Ooh, isn't that fun? And then you got another one right here. And then you right click and that ends it. If you don't right click, it ends up in giving you a beautiful star. So you go left click, 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 left click. It'll give you as many as you want as you left click. If you want to stop it, you got to right click. You right click, now you're done. And then you can do this fun thing. Watch this. Not that this has anything to do with trading. It's just cool. All right. All right. Now, remember, we talked about GAN fans. I introduced you guys to GAN fan the other day. We're going to just drop a little GAN fan in here. I'm going to put it right here at the bottom. I'm going to just start to draw the GAN fan. And as I draw it, you notice it goes all over the place. And you're like, I don't know where to draw the GAN fan. Do I put it here or here or here? Up here? Maybe I put it down here. I don't know where to put the GAN fan. So you hold down the control key while you're drawing it. While you still got that left mouse button down, you hit the control key, boom, and it puts it squared. Look at that. Now it won't go all weird and crazy. It stays where it's supposed to be. So you bring that up there. And then you release the control key or release the mouse button, release the control key, and it'll stay square. Now, that one-to-one line is measuring from this point to this point, and that's your squared GAN fan, all right, based on this model. So now what we've got, you'll notice our natural trend line is almost exactly one-to-one. It's following this. This trend is perfect. See, if it goes up in between this region here, let me draw for you. If it goes up from here to here, all right, that region is too fast. The market is rising too fast. It can't stay up in there, all right? Oh, why did I deleted it? Here, here, here. All right, it can't stay in there. So it's got to fall out of that. So if it goes up into there, it's rising too fast. See right in here? See how it rose too fast right in there? Where's my arrow? Right in there. See this? It all rose up too fast. So it's got to fall out. Usually falls out and uses that one-to-one as an area of support, and then it'll start going up again. Now, if it falls all the way down here, so it's going right up through there. Now, as long as it stays inside of this cone right here, That's the good cone. That's where you want the market to stay as it rises in price. All right. Now, if it falls down here, this is the bad zone. All right. You don't want it down in there. So you want the market to stay inside of that little cone of probability, a little projection cone. As long as it's in there, you're happy. But when it starts coming down here and it starts testing this lower zone down in here, it starts coming down here. As long as it keeps going up in there, you're happy, happy, happy. But as soon as it comes in here and it flushes down below that line, you're sad, sad, sad. All right. So that's your happy lines as far as GAN's fan is concerned. I like to see it stay right as close to that natural 1-to-1 as possible. And it's doing a nice job right there. It doesn't mean it can't flush back down. It can. So if we come in here and we put our 50% ruler in there, let's say that's the top. Well, we would expect it to come back down into this region here somewhere. If it stays above this area right in here, according to GAN, now our Fibonacci is saying this is the region that it can come down to. GAN wants it to stay above that 2-to-1 when it comes back here. So that'd be 50%. And then it could start to rally again and you'd still be copacetic. All right. So anyway, that's just a quick GAN lesson. All right. So we don't want to get into this one. It's too high. This one, same, too high. What about Hood? Same. It's up there onto a C drive. Look at that baby. Boy. How much money have you guys got into these markets? I got every single penny I own. I actually take that back. I got some dividends that paid out to me, and I haven't put them back in the market yet. They're just sitting in my cash account. But other than my dividends that got paid out, I'm 100% back in this market. I got everything I have except for dividend payout back in the market. I've been buying, accumulating all the way down. And man, this last little bit's been good to me. I have to admit, don't want to brag because I'm not a bragger. I don't want to brag, but it's been really good to me. Done well. This is Palantir. Look at Palantir go. Now I've been taking a little bit of profits off up in here, not much, but I've been taking some profits off as this market goes up. I've been taking a little off because I'm expecting it to give us a little bit of a pullback. And that's kind of why I'm hanging on to that cash in my cash account, because I'm looking for a little bit of a pull off on Palantir. I'd love to see it come back down to this previous high right here. I don't think we'll get it, but it might. And if it does, that's where I'm a heavy buyer. I'll start buying up really strong right in here. I don't know if it'll come all the way back down into here. We might not see it down in there. It might just come down, break. And this is a strong market. If it can come back to 23.6, I'll probably put some in right there. Put some more in. And then I'd put some more in here and some more in here and some more in here and some more in here. But I don't think we'll see all that. This is just such a good market. Kramer called this a meme chart. I don't know if you saw that. I listen to Kramer once in a while, but he's a little bit too crazy. Honk, 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 all that stuff. He gets me a little crazy. So I can't watch him too much. But I like Kramer. He's okay. But he's all about the fundamentals. And I think that he's got a track record of being wrong all the time. And he works on the fundamentals too much. And I think that he's too much driven by, you guys read my article in Pip News Magazine. I think he ends up being a little bit more of a voice of BlackRock than he wants to be, or than he knows he is. So anyway, I don't know. He does a lot of his own fundamental work, but he doesn't do a lot of technical work. He's not a technician. And he has Carly Garner. You guys know Carly Garner? She comes on his show every now and again. Did you know she was one of my students? Carly Garner was one of my students. Real proud of her. She's come a long ways. And so I'm real proud to see her. She's on, one of my students ends up on MSNBC with Jim Cramer. That's pretty cool. I wish I had a feather. I'd put it in my cap right now. That's pretty cool. I'm pretty proud of that. She's a good friend. And she does technical analysis for him, and he looks at it a little bit. But he doesn't do a lot of technical analysis. So anyway, keep that in mind. I'm much more of a technical analyst, as you know. All right, here's Rocket Labs. James Reardon just says he knows Carly. Where did that little thing go? Where did that go? Oh, there it is. James says he knows Carly. Yep, she's good. She's got a book. Where is it? Usually I keep it on my desk. It's a book on options. Where is it? I bought like 3 copies because I take one to class and then I lose it. I have one in my office here in St. George, and then I have one in my office up in Logan. I have to have like 3 books. It's a really good book. She's written a really good book on options. So it's all on futures. So I said, why don't you do a stocks version? She goes, I don't have time. All right. So what's this one? This is Rocket Lab. Rocket Lab. Look at that. It's respecting this nice little trend line up. It's coming into a wedge. Wedge patterns are very infamous for flushing out the bottom. All right. So keep that in mind on Rocket Lab. Now these companies, again, we're in the 100 club. So every single thing that's in this list was up 100%, over 100% last year. So these are all good companies people like. So we just want to find an opportunity to get in. They're all too high though. They're all up into our X3 SA1s. So can't buy up in here. So this one right here, it's an ugly one, but it is what it is. It's an X2S A1. That make this little thing right here. This is our A2, and that makes that right there A3. Can you guys see these? I don't know if you guys, I see them. They pop off here like popcorn to me. I don't know if you guys are still looking at these going, Land, you're drunk. I don't have any idea what you're talking about. I can't see anything that you're talking about. Where are these little ABCs? They make no sense to me. I don't think so. I think if you guys are in this class and you've been coming to my class, you're starting to see these things. Because if you were, you'd be like, this guy's drunk. I'm out of here. But it's true. It's a thing that happens. And you follow along with me long enough, you can see, oh my gosh, these are real things. This isn't something Land made up. All right. There's SMCI. We put that one on last night, so I'm going to skip that one. AT&T, we did that last night. You know what I did last night? Made a mistake. I made a mistake last night, and I'm going to show you what that mistake was. Look, we put a stop in here, and there's no stop. Where's your stop, Land? That's gone. Where'd my stop go? The whole idea of putting it on last night before the market closed, that we could put a stop in here, right? And not catch a flush, not get hit by a flush and feel bad. So what happened is I had this thing, you right click on these buttons. You got to right click on these buttons, and they were set to day. You remember? And we put that order in there, and I don't know what the heck I was thinking, but I put that in there, and it said day. And so at the end of the day, which was what, 10 minutes, and it went away. So we had no stop. So don't make that mistake. If you're going to have a stop, make sure, and you want it to go longer than the day, turn that, you got to right click and turn that either day or good till canceled. We want it good till canceled. I wish they would actually put GTC right there, but they just take it off. It's either, if it's a day, they say day. So it's just assumed good till canceled because it doesn't say day, but that's the way they do it. All right. So we just put our little stop right in here. If it fluffs down below that, we just get out. Hey, we could come in here and say, I don't even want to take that risk this morning. I'm going to bring my stop up to here. If it doesn't go, I want it to go immediately. When I get in, I want it to go. If it doesn't go, just get out. I don't take big risks. So I'll put my order down here, and the night before, the 1 bar back, right? And then in the morning, when the market puts in its low for the bar, I just use that next bar. I'm just like, if you don't go, I'm getting out. Look at this dead market. It doesn't look like it wants to rally. So I'm just like, well, if you don't go, I'm getting out. I ain't hanging with you, buddy. So Toast. How many of you have heard of Toast? Now I had to come back in. I put this stop in already. I came back in this morning. This is when I realized that our stops were set to day. So I put this one back in like it's not really going anywhere either. Not going. So you could come in here and say, well, if it doesn't go, I'm out of here. I ain't going to wait. So I don't know if it breaks down. But this is your down in here, this little down in the little hole. Down in the hole. Okay, this is X1S A1 down in that hole. This side of the blue lights. The low point, that's the Donald Trump bar. See, that's how much power the President of the United States has. He can say, everybody buy. And that's what happened. He doesn't have no power. He can't tell you to buy and make the market move. No. He doesn't have any money he's not putting money on the markets. BlackRock controls this market. BlackRock. Right? So this is A2. BlackRock, Vanguard, State Street, all these big companies that run that Aladdin, they own this market. They own this. They own this. This is their carnival. The president is just a player in the carnival game. He's not the owner. All right. So we come in one more. This is that's A2. That means this is A3. All right. There it is. It is what it is. We bought on an A3. I'm not happy with that. I was showing you how to do it. I wouldn't have done that if I was paying attention. All right. We're in the A3. Don't buy new into the A3. You can add on at an A3. Just don't buy new at an A3. All right. So that's our natural trend line. You can see going right up there, this little thing. It should pop up. It should go up and at least test this high right here. This is an A3 after all. So there's our high right there. So it should at least go up to there. Should at least go up and try and break that high. We'll see. We'll see. Keep your eye on that one. Buying in at an A3 is not good. That one's Targa, Flushing, Tesla. Oh, Tesla. I love Tesla. Natural trend line, mathematical trend line. That's our first. So this is going to be, look at this. This is our X3S A1. I use this one as an example. Did you guys see the example in the Pit News magazine? I use Tesla. I think I have that chart right here. Look at this. And I'll show you. Look at this baby. If that's not exactly what Tesla looks like, I've never seen it. This is going in the manual, guys. This is going as an example in the manual. How come I can't make that bigger? Come on, Windows. Oh, well, it is what it is, guys. That's the side. Okay, look at this. That looks exactly like Tesla. Does it not look exactly like Tesla? Oh, James, you're still saying I know Carly. She's giving her a lot of advertising there. Look at that. Look at that. Look at that. Look at that. My gosh. If that's not the perfect drawing, I mean, it's almost like they drew the picture. It's almost like we drew the picture after Tesla did this, isn't it? It's that close. I drew this picture 2 years ago, 5 years ago. This picture's in my book, I think. Maybe I drew this after I wrote my book. No, I think this is in my book. I can't remember. Look at that. You'd think I drew this after Tesla did that, wouldn't you? No. Nope. Look at this. Okay, so that's an A. Okay, the low below the little blue dots. Remember, don't forget. Low below the little blue, high above the little blue dots. So this crossover here, that's the high right there. This is the one we're counting always on the left side of the blue dots. Okay, so the blue dots are here. So that's your X3SA1. Oftentimes I'll just say right there where it crossed, that's X3SA1. But it's actually this little hole down in here. Okay. X3SA1 is right there. Okay, and then we got the natural trend line, we got the mathematical trend line, and then we got the little pennant formation. So a little pennant formation coming in here. Right there. And that is going to be, and why do we count them like this? Well, it's the probabilities, right? This is the A2. So what's the probability of an A2? Well, it's the same thing as when we're coming down. I always talk about a 25% chance, 50% chance, 75% chance. So we're coming down here, A1, X3SA1, that's a high probability, right? So we come down here and we're going to say, we always say that's about a 75% chance that that's going to be the bottom. Well, then we're going back up the other way. So now you have, this is basically a 50% chance that this is going to be turn around and be the top. So that's about a 50% chance that's going to be the top. That's pretty good chance that we're going to go rise again. And then if it comes up here, we'll have one more, and that will be That's going to be, actually, am I doing this right? A3 is going to be like a 75% chance. A3, 75% chance. That's the top. So when it comes up here and makes that A3, you got a 75% chance that baby's going to turn around at that A3 and is going to flush back down to what? Delta cone of probability. Back down into this region here. So it's sitting right dead center of the delta cone right now. If this was where, of course, I just swagged that, made a scientific wild ass guess where I think that's going to go. But that would make sense, right? Right in there is where that yellow bar is. And then that red line coming in there, that's 50%. So if we said that's where that mark goes to, we'd expect this baby to come back down into this region here sometime. So if you feel like you missed it, well, just wait, it'll come back. That doesn't always come all the way back the way you want it. Sometimes it might just come back to 38. And there's another number hiding in there. There's this little 23 right in there. Sometimes market only comes back to 23. If it's a powerful market and starts going back up again. So keep those numbers in mind. Those are just probability numbers. They're just mathematically calculated probability numbers. But it's the A2, A1, A3. There's Tesla. We looked at the Tesla is the dividend version. So if you guys want to get into Tesla, put it into TSLY right now. Start building up your dividends coming in. This would be a beautiful place to be putting into Tesla. Drive 1, drive 2, drive 3. This is look at this. Drive 1, drive 2, drive 3. This is this point right here. What does it do after that? Rises in price. Is it going to land? I don't know, but look at how perfect it's been following this thing. Like a train on rails. Okay. All right, let's go one more. UAL, United Airlines. Now, United Airlines, there's our Donald Trump bar. So let's come in here. Drive 1, drive 2, drive 3. So it's X3SA1. X3S / A1. Ooh, this is tough. Yeah. That almost right there. Almost right there. I don't know what to call those. It is what it is. That's ugly. That's ugly. This is our A2. That makes this A3, but that's not a bad A3. That looks like a nice break A3. Huh. Look at that. I don't know. This has some upside potential for, that would be our target right up in there. I think it'll go up there. How much money is that? Let's say you got in with 100 shares. That'd be almost $1,000 trade right there. Wait, don't buy it right now. It's 9 o'clock in the morning. What'll happen? Usually, let's come down to a 2-minute chart. Around noontime, this market will flush back. Turn on Heikenashi's. Wow, look at that. That's beautiful. That's a beautiful morning trade. How would our 5 o'clock bell go? Oh, that is the 5 o'clock bell. There's your 5 o'clock warning right there. And then 7:30 was right here. That thing gone straight up. Okay, look at the 5 o'clock bell. That'll tell you if it's going to be in play, usually. Not that it always works, but it works most of the time. And look at that nice, big, beautiful drive 3. That's see, A3 right there. That's an A3. Unfortunately, it's an A3. We'll see. Anyway, don't buy it right now. Wait till the evening on this one, because I think this thing's going to come back down, as it usually does. It might go up higher, and that's okay. Go up higher. It's fine with me, because around noon, this thing will turn. It'll start to get quiet. Then it'll start to go in, and maybe you might get some power hour movage, a little power hour movage out of it. But wait for it to come back down, because it'll probably fluff out in here. They always do. Not always, but most of the time they do. They start to flush around 12 o'clock and they get tired, and then they start to come back down. So that'll give you an opportunity to get back in on this, and you can ride that one up tomorrow. Because I think that baby, that's a nice little buy signal right there. We'll probably see it go up to at least right here. Test this previous high up in here. That's $1,000 on 100 shares. How much was 100 shares? How much it cost? How much it cost for 100 shares? 100 shares cost $7,379. That'd be a nice trade. All right. So watch that one this afternoon. Okay, here's another one. I'm not going to count this one off because it's too obvious. This is one big drive. I don't know. This really was weird how that did that. It almost looked like drive 1, drive 2, drive 3, but then it went up and broke this high. So you can't count it as a drive 1 over here. That's your last drive on this drive here. So this is drive 1, counter trend, drive 2. All right, it's just a typical ABC retracement pattern. All right, so now I'm going to draw our trend lines, natural trend line right up there. So there's your A1, A2, A3 right there. So you're buying into an A3 at this point. Don't want to do it. All right, guys, that's it. That's all I got for you today. It's a good lesson. My software crashed, so my Sunday school lesson went away. Let me see if I can find it real quick, because I did have a Sunday school lesson prepared for you. Let me see if I can find it. And then my software crashed this morning. Where did it go? Where did it go? I can't find it. We'll use this one. Here's my Sunday school lesson for you. All right. Taking money from Wall Street is like taking a bone from a junkyard dog. All right. Maybe easy to place trades, but it ain't easy to make money. Buy low, sell high, use stops, get out when you made money. Take money. You can never feel bad about taking a profit. All right. Yeah, the market could have gone farther. Yeah, you could have made more money, but you made your money. Don't feel bad. Be happy that you're one of the guys that made money, because that doesn't happen very often for most guys. All right. All right. Let's come back and see if there's anything that I missed. Everything looks good. All right, guys, I'm going to let you go. Come back over here to end on this little view here. How do I do that? There we go. All right. And if you guys have any questions, please let me know. We're going to have a different schedule starting next week. We're going to go into, since this is May, we're going to go into the summer schedule. Again, I'm a university teacher. These are labs for the university. I don't teach during the summer, but I'm not going to stop the labs. I'm just going to scale back a little bit. So we're going to start, our next live class will be on Tuesday morning. We'll do day trading on Wednesday, and we'll do another live morning class on Thursday. I'm not going to do class on Monday and Friday. School teacher. I like to have the summers off. All right. So we're going to scale back. We're not going to take it clear off. We'll just scale back a little bit. So we'll just do 3 days a week. And then when school starts back up in the fall, we'll start doing every day again. But we don't need to be doing every day right now. Sell in May and go away. All right, guys. So be gentle with your accounts. We're in a good opportunity right now because markets are rebounding off of that big fall. So we don't want to really sell in May and go away right now because there's too big an opportunity right now. So, but it'll calm down. Markets will calm down for the summertime a little bit here, and just be careful. Be careful. That's all I have to say. Like a father sending his daughter out on a date. Just be careful. Just be careful. All right, guys, that's all I got for you.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.